Welcome to Dig Deep, the mining podcast.
Hi mining community, welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Guy Winter, who's the energy and natural resources partner at Fasken, who are a leading international law firm providing practical and innovative legal services to solve the most complex business and litigation challenges faced by organisations in various industries, including mining and the natural resources industry. Guy's background is in M&A, equity capital markets, private equity, venture capitalists and restructures, and advises clients across the entire battery minerals value chain. He's on the podcast today and we're going to be talking about why the mining majors haven't done more deals in the critical minerals sector, and what the deal landscape currently looks like in terms of asset classes and transactional parties. So no further ado, let's welcome Guy to the podcast. How you doing, Guy?
I'm great, Rob, and thanks a lot for having me on Dig Deep.
No, and I appreciate your time. I know you're an active listener to the podcast, so it's great to have any of our listeners that want to come on and showcase their companies, their projects, and educate our mining industry. So, as you know how this always goes, I wonder if you can just tell us a little bit about your career, your background, and then we can go into more questions about your particular specialisation.
Absolutely. Well, so I've been working in energy and natural resources for a very long time now, longer than I possibly should admit, over 20 years. And I joined Fasken about 4.5 years ago. This was really an exciting time to get involved with such a strong mining and natural resources platform. Because what we've really seen, my background prior to joining Fasken, I was the co-head of energy at Adelshaw Goddard. And we had a wonderful renewable energy franchise there. And what we were seeing was the emergence of battery storage as a really interesting utility scale battery storage, as a really interesting asset class. Also some really interesting transactions in electric vehicle infrastructure. And so really it's all part of this incredible energy transition and transport transition, which is taking us away from the internal combustion engines that we all grew up with to electric vehicles and batteries, and the huge amount of minerals that those batteries require. Here at Fasken, that is a real sweet spot for us because it's that kind of intersection between energy and mining. Obviously, as a Canadian headquartered law firm, mining is very much in our DNA. We also have a significant operation in South Africa, like yourself now, Rob, in fact. And so we've got over 100 lawyers in Johannesburg, doing some really innovative transactions across the energy and natural resources sectors. So, it's been a great time for all of us involved in the market. I think it's a generational opportunity to participate in energy transition. And of course, mining is such a fundamental part of the supply chain for energy transition.
Just wondering if you could just tell us a little bit about Fasken as a company, and I suppose how you would help mining resources companies. Obviously you're in law, so maybe lawsuits or litigation or other kind of services that you do provide.
Yeah, absolutely. So Fasken is one of the leading law firms in Canada. And we have offices across all of the major jurisdictions there. We have very, very strong mining teams, not just in Toronto, but also in Vancouver, Montreal and Calgary. Essentially what we're focused on within the global mining group is deals, projects and disputes. So we are really helping mining companies and investors in the mining sector at every level of their development. We really pride ourselves on the relationship that we have with the junior mining companies in particular. These guys are the lifeblood of the sector. They're the guys who are doing the exciting exploration and development of assets, and creating these assets that change the world in terms of the minerals that go into our energy transition. So that's really exciting for us. We pride ourselves in the way that we work together across the major mining jurisdictions. So we work really, really closely with all of the Canadian jurisdictions, but also with our colleagues in South Africa, and we have a small office in China as well, which is obviously a very significant market in terms of the end user of all of these materials.
Why do you think it's such a challenging time for the critical minerals projects to find equity, despite the macro trend of the whole energy transition?
Yeah, it's kind of it's a slightly strange situation, isn't it? Because there's this huge opportunity, as I say, like probably the biggest transition since the Industrial Revolution. This huge underlying demand for more materials, and yet when you actually look at the environment for raising equity, it has been incredibly challenging over the last year. I mean, I think we've really been in a bit of a perfect storm. There's some issues which have been applying across the market as a whole, not just to the mining sector. So, there's obviously been issues with the appetite for growth companies in a high interest rate environment. There have been big concerns over the Chinese property crisis, and that has a huge knock-on effect on construction as well. Then, sadly, Rob, we've had some issues which are kind of particular to us in the mining sector. There have kind of been more scandals than a Tory party away day in Vegas. And that doesn't help, because we want to encourage the generalist investors who, may invest across a range of sectors to put their resources into mining. But, when mining has had a few high profile own goals, that really doesn't help. And I think, fundamentally, when we talk about critical minerals, we're talking about lithium, nickel, cobalt, graphite, manganese. So these are actually all quite immature markets in terms of the history of mining activity. The gold market and the copper market are very well understood. The prices work very well at the LME. There's a high level of transparency. And unfortunately, it's kind of the opposite in battery minerals. We've seen these markets really struggling to find their feet. The collapse of the LME nickel market in 2022, as caused really seismic shocks throughout the market. It undermines the confidence that people have. And I think, to your earlier point, it reduces the appetite that the majors have to invest in these metals. And so what we've really seen is the mining majors doubling down on the gold and the copper developments that have made them rich and delivered steady returns and investor value. And they've really been very gun shy when it comes to the likes of lithium, nickel and cobalt. And then I think, it would be wrong not to mention also that, as is becoming extremely well publicized, the critical mineral markets are really dominated by China right across the value chain. And so not just the kind of upstream mining activity, but refining, processing, the downstream activities. And the fact that all of that is concentrated in China has had a huge impact on the transparency of the offtake and pricing of these metals. So the markets are still very much finding their feet. And I think the volatility that we've seen has really been punished by investors.
So who has been investing in critical mineral projects, if it's not some of the mining majors or even some Western private equity players?
Yeah, I mean, that's an interesting thing, because the conventional wisdom of mining finance is supposed to be that plucky promoters and developers on a wing and a prayer, they find the asset, they somehow develop it, they raise money any which way they can, they strike pay, and then ultimately the majors will take the project forward into full development. And this is the kind of cycle, the capital cycle that we haven't seen in critical minerals. And so what we've seen is some real non-traditional players come into the market. So one really interesting emergence was the Middle Eastern sovereign wealth funds and government-backed players. So the Vale base metals deal, we saw Manara Minerals come out of Saudi Arabia to do that. For the Mopani nickel mines, copper mines deal, again, that was a UAE player who came out to invest. And so whilst, as was publicized in the press, there were maybe more traditional mining players like Sibanye-Stillwater interested in that asset, it ended up being someone with no real history in international mining who came in. And the word is that they're looking at other, copper mines in the Zambian copper belt as well. So really fascinating to see a completely non-traditional players like that come into the market. Then also governments. The US has really been the big dog in terms of governmental involvement in the sector. So some really high-profile deals there. The Lithium Americas Thacker Pass deal. You've seen direct investment from the UK government. Now, you're not going to see that in gold. It's really a fascinating development to see US government agencies directly investing. Although actually they have announced investment in Perpetua Resources as well. But that's really for the antimony rather than for the gold as such. And in Chile as well, we've seen the Chilean government actually getting directly involved in the lithium market. And so they have entered into a joint venture with SQM. And then they've also gone into the market to buy Lithium Power International. So again, a level of governmental involvement in the sector that we hadn't traditionally seen. Another really interesting player is OEMs. The idea that you would have automotive players coming and directly investing in mining is really extraordinary. But we've seen very high profile deals, GM in Thacker Pass in the US, and then a number of other of the aborted ACG acquisitions deal that had Volkswagen and Stellantis involved as investors in the project. So again, really novel players, Rob. So when you and I probably first got involved in this sector, we wouldn't have expected to see, car manufacturers coming in as players on these deals, but that's where we are. And then I think another interesting, I know you have a fondness for Australia, and Australia has got an interesting phenomenon as well. They're determined not to allow Australian assets to be taken into foreign ownership. And so we've seen some really interesting deals with local champions like Hancock Prospecting emerging to invest in key Aussie assets. And so there again, you've seen the Australian billionaires rally around to keep the crown jewels in Aussie.
Talking about the US, has the US Inflation Reduction Act created a funding gap between the US and some other Western countries in the critical mineral space?
Yeah, I mean, I think the US Inflation Reduction Act is it's obviously an extraordinary piece of legislation. It's an extraordinarily decisive measure, and it has pumped unbelievable amounts of liquidity into the energy transition. I think that one of the things that's made it very controversial is that it essentially, when it was first announced, made no provision at all for Europe in particular. And so it really created a lot of sensitivity between the US and the European Union in particular by the fact that it had no preferential terms for Europe. So on the one hand, the US was saying, you are essential partners in building supply chains outside China. On the other hand, it had the effect of sucking investment away from Europe and not in any way securing Europe's access to critical minerals. And so what we've seen since the initial rush of the IRA is attempts have been made both within the United States to make it more palatable to Europe, but also within Europe to announce their own measures. So there have been some really interesting moves in terms of funding platforms which have been set up by various of the European member states. And that's really the European response to the Inflation Reduction Act. And so funds like Infravia in France, the EIT, InnoEnergy and Demeter Fund, and the Talisman Fund in Italy. And these are all pools of cash that are designed to secure critical minerals for the EU. The reality is, though, that the delay that we've seen in Europe and the sheer firepower of the Inflation Reduction Act does mean that the US has really surged ahead. And if you look at the total investment that's gone into the sector, it's hugely disproportionate in the US compared to what has happened in the EU. So it's a real case of catch-up in the EU at the moment.
Do you think the West is finally catching up with China in the critical mineral space? Obviously, China probably far outweighs the critical minerals they have in country, but do you think the West is slowly tightening that gap?
Yeah, I mean, you're talking here about essentially giving someone a 20-year head start. And, you know, what we saw in the West was a willingness to outsource all of the processing of these tricky materials. And they are tricky materials. You know, as you know, lithium is more akin to a chemical process than mining gold, for example. It's very, very complex. It has the potential to be highly polluting. And the West was happy to allow all of this to go to China and essentially outsourcing the pollution and associated social issues of all of that. So the reality is that China is far, far ahead. And not only that, but China is making massive investment itself. So they don't want to allow the advantage that they have to be eroded. Nonetheless, we do think that you know, the US in particular has made some amazing strides in terms of the capacity that they have. I mean, one interesting thing, Rob, I think will be the arrival of the Chinese EVs. I mean, so far, you know, you probably have your you may well have a Tesla in your outside there yourself, Rob, but certainly a lot of my neighbours have got them. Well, the interesting thing will be whether it's a Chinese EV that you see next, because if you walk down Berkeley Street, you can see the BYD showroom. Beautiful cars and, you know, very, very cost competitive. And China can ensure that they're cost competitive because of the control that they have over the value chain. So it'll be really interesting to see the impact that has in terms of the whole value chain. But saying that, I think we also seen a bit of convergence. There was some very aggressive rhetoric that came out at the time of the Inflation Reduction Act about total segregation, going cold turkey effectively from Chinese critical minerals. I think there's possibly a realization that just isn't realistic after those 20 years. And so we've seen interesting deals recently where General Motors of the US and Cattle of China have entered into talks to explore options for a joint gigafactory in North America. And so GM would license in the lithium iron phosphate battery technology from Cattle. Now, that is a very different type of deal than what was announced at the time of the Inflation Reduction Act. The rhetoric then was that China would be completely excluded from the US supply chain, whereas I think maybe some realism has caught up with us now.
Do you think Western national security vetoes will drive or inhibit critical minerals funding opportunities?
Yeah, so it's always a bit of a dangerous game, you know, protectionism. What we've seen over the past few years is a big trend in national security-based protectionist measures in all of the Western countries. So here in the UK, we have the National Security and Investment Act. That means that deals in sensitive sectors will be scrutinized by the government for national security issues. And those sensitive sectors will include critical materials. So lithium, for example, is very much on that list. Any deal involving lithium where you have a significant change in ownership, you're going to see the UK government scrutinizing it. The Investment Canada Act, that my colleagues spend a lot of their time advising clients on, has been used by the Canadian government to force 3 divestments of Chinese investments in Canadian mining companies. And sometimes those mining companies haven't even been, they've been companies on the Toronto Stock Exchange, but they haven't been Canadian assets. They've actually been assets in South America, for example. So that's a very rigorous national security examination. And so that has caused a certain amount of tension, obviously, between the geopolitical blocs. The interesting thing, the other day, China's ambassador to Canada said that China will continue to do business in Canada despite the crackdown on foreign investment under the Investment Canada Act. And actually, there have been a number of deals recently where Chinese companies have moved to take minority investments in Canadian companies. And I guess on the flip side, we may see some deals generated by what the concept of friendshoring. So the Minerals Security Partnership is an interesting collaboration between the United States, Canada, Australia, the European Union, South Korea, and Japan. And essentially, that's a collaboration to support access to critical minerals. And so the Minerals Security Partnership has made a number of investments, including in Hypromag, which is actually a UK-based permanent magnet recycler. And so potentially there will be some deals generated, albeit that we're going to see very intense scrutiny of deals that involve Chinese capital coming into Western critical minerals assets.
Obviously, you're working for a law company. Do you see any common mistakes between companies when they're structuring deals that maybe you can give some advice to those that are listening, whether they're in critical minerals or not critical minerals, in some of the issues that you would then probably be brought in later on to maybe fix issues? Is there any sort of common themes you would say in any advice that you could give companies if they're striking a deal?
Yeah, I mean, I think preparation is key, isn't it, in everything that we do, and that's probably particularly true of carrying out complex legal transactions. I mean, I think one thing that we would always encourage, obviously, to take advice early. So one of the problems that we often encounter, Rob, is that people will send us a term sheet or heads of terms that set out their understanding of the deal that they want to do and say, turn that into a contract. But in actual fact, there's a lot more that they should have considered before. And sometimes people have entered into that type of arrangement without having taken advice on the potential issues that could arise. So that's really part of the planning that you should enter into. I mean, one simple step that people very often neglect is when you are entering into any kind of transaction, you're going to have a level of disclosure of the information that you have, the contracts, the licenses, the employment agreements, the environmental permits, etc. And so people will often enter into a transaction without having taken stock properly themselves of exactly what their position is. And if you allow someone to come in and examine those and you don't know what they're going to find, then you're likely to have some issues. You'll be on the back foot immediately if they find the problem rather than you finding the problem. And you'll be, the whole process is likely to take longer and be much more costly and time consuming. So I would always suggest that people are engaging, it doesn't have to be a law firm, like the in-house counsel can also provide in many mining companies, will provide invaluable support. But just to make sure you get that input into all of the heads of terms that you enter into, and that you're preparing well in advance for these transactions. And then also, it's important in this environment to be aware of all of the regulatory issues that may arise and build that into your timetable. So talking, for example, about the National Security and Investment Act, that's a new piece of legislation. That's a 2021 act that was passed. But it has a significant impact on the way that you may execute an M&A transaction, for example. So again, you would want to have a good understanding in advance of what issues might arise so that you can get ahead of the curve on those types of issues. And I think for any deal that is involving an overseas counterparty, especially if it's a Chinese counterparty, a Russian counterparty, that's going to be very challenging. And I think you're going to have to factor all of that into your planning. There's no good cooking up a deal and not considering all of those implications in advance.
If you look at the various governments around the world, are they understanding the complexity of the mining industry? And obviously, if you're looking at critical minerals, how long it actually takes to get these minerals and raw materials out of the ground. And obviously governments are going to be at different stages. Are they slowly getting to understand our mining industry, and obviously how long it takes, that the whole process of actually getting the raw material to the manufacturer, the OEM, for them to use? Are they slowly getting it?
So I should declare a slight interest, I guess, Rob, because I'm actually on the UK government's Critical Minerals Expert Committee. So we have somewhat failed in our remit if we haven't conveyed that message. But yeah, I think you've summed it up really well. I think the reality is that they are slowly getting the message. I think we've seen a number of strategies come out. So here we had the UK government's critical minerals strategy. Similarly in Canada, the United States position is pretty well addressed through the Inflation Reduction Act and that whole process. Australia, I think, not just the federal government, but also the states have got very sophisticated plans. It's interesting. I mean, I think that it has taken government a very long time to understand the nature of these particular elements. And I think one of the reasons for that is I referred earlier to the features of the gold and copper markets, for example, very long established. Now, you're not going to find a gold company that needs support from a government. I mean, they have totally failed if they're in the position where they need to do that. Because at the end of the day, if you find the gold and the grade is good enough and you can mine it profitably, you can shift the gold, and we can see that the gold price is going tonto anyway, so you're not going to have any issues there. But it could hardly be more different from lithium, for example, where incredibly difficult to extract. Just as you say, one of the big issues with lithium is the fact that to actually get it into a battery that's going to be in a car that someone's going to drive at 70 miles an hour, that's incredibly exacting. The timelines for getting it from the mine into a battery and to getting the specifications right, is very long and very challenging. And I think the problem that we've had is that it took government a very long time to understand that critical minerals need to be considered differently from traditional mining activities. Governments have been very resistant to investing in mines. And actually, what we've seen with the deals that I was talking about in the United States is a complete change in mindset to recognize that these minerals require a very different strategy in terms of government intervention. Now, as to whether we're doing enough, I personally would say that varies a lot between the countries in the free world. I mean, the United States is on it, gold badge. They really are tipping a lot of resources into it. The EU is lagging behind. And sadly here in the UK, we have lacked the firepower to compete financially with those guys. And so I think, but what has been encouraging is I think the thinking now is a lot more sophisticated here in the UK. So we maybe understand that it's in areas like refining, processing, recycling, that we actually have a real role. So we may have some mines, and we all know there's some exciting mining companies, especially in the southwest, but we're not going to compete with Australia, Canada in the actual upstream mining. But maybe we can help by partnering in the refining, the processing, and the recycling. And I think that the UK government now has got quite a good understanding of where to get involved.
Will the two-tier pricing for green and regular minerals create a new funding market for ESG compliant mining projects?
Well, hopefully. I mean, that's been the sort of long-term. Robert Friedland said a few years ago, a great visionary in the sector, and he said there won't be just one price for commodities. There'll be two prices. There'll be the price of ESG compliant, gold, copper, nickel, and there'll be sort of regular, or I guess ESG non-compliant. And I think that, is slowly coming to pass. So Andrew Forrest has recently been catching the headlines by calling for a green nickel price, and in fact threatening, that if the LME can't come up with a green nickel price, then people will move away to other trading venues. The LME said, and this I thought was quite interesting, that there wouldn't be enough volumes in green nickel. So, I mean, what they're really saying there is, do the customers actually have the demand to pay a premium for green nickel? But, that at the same time there has been progress. So Benchmark Minerals Intelligence have recently announced that they're going to provide a 2-weekly price assessment for nickel metal and nickel sulfate. So, you're kind of getting to a position where you will be able to see the differential. And I think one thing that will be really interesting is, for example, through the EU battery regulation, you have to have a battery passport. It has to show every step that the provenance of the materials. So that's going to tell us that that is going to make ESG compliant material more valuable as a matter of course. And similarly, under the EU Critical Raw Materials Act, you're going to have a recycled element and a EU produced element of proportion of all of these materials. And so I think differential pricing is definitely going to provide some more price stimulus for Western ESG compliant material.
And lastly, what's the outlook for the remainder of 2024 for the critical mineral space? And are better times coming?
Well, I hope so. It will be nice to do some IPOs, much as we enjoy dealing with all of the other stuff. You want the big deals and new companies coming onto the market to drive the future of critical minerals forward. I mean, it kind of depends who you speak to at the moment. I think, some people are very bullish on even nickel, which has had a real hiding. Vale came out this week saying that they think that by 2028 there'll be a global deficit in nickel. So that's a sort of midterm adjustment, I guess. I think most people are very bullish on copper, let's say over a 10-year horizon. As to whether it will be by the end of the year, Rob, I'm not quite so confident. I guess what we've probably seen, though, with all of the critical minerals, so lithium has had, a very wild ride, but it's probably found the bottom of the pricing. I think, nickel has found some kind of stability, and I think the Indonesians will wish to keep the nickel price, within reasonably tight constraints. And so maybe we've reached a kind of a level of stability that we can move forward for the rest of the year.
Guy, thank you for your time. Really appreciate you giving us a update on the critical minerals space, and obviously your thoughts on the various subjects that we have obviously spoken about. And perhaps you want to come on later this year or even next year and give us an update on some of your findings and research that you've done.
Yeah, that would be amazing. Thanks for having me on now, Rob, and it would be great to speak again. I guess if it goes really well, I'll have retired, but the likelihood is that I'll see you then.
Yeah, certainly. And if our audience wants to reach out to you, if they've got any questions, if they want to follow your story, some of the reports that you produce, how can they go about doing that? What social media platform channels are you on?
Yeah, thanks. So, the Fasken website, which is just www.fasken.com. But I'm also on LinkedIn, and obviously delighted to speak to people in the sector.
Yep, certainly, and we'll include those in the show notes. So, as always, really appreciate you coming onto the podcast. You're an active listener as well, so you may want to replay this back when you listen as part of obviously listen to all the episodes that we produced.
Yeah, well, I don't know whether I'll listen to this one, but I'll definitely continue tuning in, Rob.
Yeah, appreciate that. Hope you enjoyed that episode. Appreciate your time as always. Please keep sharing these episodes far and wide. As I always say, not always just with people in our mining industry, but people outside of our mining industry. We need to improve the I suppose, branding of mining, and we're only going to do that through education and through sharing episodes and podcasts like the Dig Deep, the mining podcast. So appreciate your continued support, and until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.